Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Aalok Patel, Joint Managing Director at Arman Financial Services, joining in. Welcome to the show, Aalok, and always a pleasure to speak to you.
Thank you so much for having me.
Aalok, my first question coming to you is overall, how would you actually describe FY21 from a business perspective, taking into consideration how COVID had impacted in the first half of FY21? Then we did see a marginal pickup that started to come in the second half of the year. Has it met your internal expectations, or do you think it exceeded? Because a lot of people have thought that the full year is going to be a washout.
Yeah. No, I agree, and that's what we thought as well. Kind of a longish answer probably, but it really started out as a very unprecedented and grim situation, and it really pushed our limits in terms of crisis management and other managerial skills. So as you know, most of our 90% of our portfolio is basically doorstep collections. So this is primarily our business model. So I mean, whether to move to cashless or that's a future story. So during the first lockdown announcement, we were mostly positive because the duration was short enough where it would not have a very material impact on the client's livelihood. But as the lockdowns and moratoriums kept getting extended, it created a situation where we were not sure how long it would take the customers to kind of recover their livelihoods and their credit discipline as well. So we couldn't collect any money during April or May. When things started opening up in June, the RBI moratorium was still not getting over until August. So really it was a coin toss on how we would fare in repayments in June. But I would say we started off better than expected at around 60%. And after that, there was a steep recovery, although it kind of slowed down at the 85% level. And it took us about good 6 months to reach about 94-95% until March. So it was kind of a learn as you go scenario, and all we could do was to try and keep in touch with the customers. We needed large amount of cash liquidity going into the lockdowns. Thankfully we started off with about 100 crores of cash. And you may recall that earlier there was a lot of confusion whether NBFCs qualified for a moratorium or not.
Correct.
So we were in a situation where we had to give moratoriums to all our customers with kind of a question mark whether we would get it ourselves. So thankfully almost 75% of our lenders did wind up giving us that moratorium. And I guess all things considered, I mean, we did wind up my expectation was quite great, so all said and done, at March, we were in a much better place than I expected, even 6 to 9 months prior. So we started opening up branches, expanded to a new state, which was Haryana. And we were in a really good position to expand very rapidly in 22, until of course COVID 2.0 hit. So one good part also was the collection efficiency in the new loans which we dispersed post-COVID 1.0 lockdowns. And that had a collection efficiency of 99.87%, which in many ways was even much better than our pre-COVID portfolio. So I guess long story short, better than expected at the start of the year.
Right. Aalok, as you mentioned, the collections improved significantly across all segments between September 2020. We almost reached, I think, if I'm not wrong, 94 to 95% by March 2021.
Right.
However, now we have the second wave that started to hit us from April onwards. Has that impacted the collection efficiency right now between April, May?
So yeah, short answer is yes, of course it has. During the month of April, they were not very impacted on a very large scale. So we managed the repayment rate of about 88% on a consolidated basis. So down about 6-7% from the previous month. And thankfully, our collection cycles run from 1st to the 12th. So most of our collections comes in from the 1st of the month to the 12th of the month. So most of the repayments in April were done by the time the second wave got really serious. There was, of course, a pretty large drop during the month of May. So May repayment rates dropped to about 78% on a consolidated basis. Microfinance dropped to 75%. And The second wave was very, very chaotic. So almost much more chaotic, I would say, than the first wave. Almost 8 to 9% of our staff members were infected. Many untold. More had families that were infected. Some were quite critical and hospitalized. Others needed to be hospitalized, but they were not finding space. So while we never lost sight of the business related issues, we of course had to prioritize the health and welfare of our staff, especially during the month of May where things were reaching its peak. So I was of course very saddened to also report that we lost 5 of our staff members as well during the second wave. But on the business front, the good news is that we have seen sort of a V-shaped recovery in the repayment rates. We are expecting to close June with a rate of about 87 to 88%. So almost a 10 to 11% jump from the month of May. Now, how quickly we can go back to March levels of 95% plus or even higher, really it remains anybody's guess. So I wouldn't want to comment on that just yet.
Right. So overall, with all of this, between MSMEs, microfinance, and two-wheelers, where are you seeing traction? Because MSMEs again are trying to survive. Two-wheelers, we are seeing auto sales numbers which are not really that good, but it did pick up in between. There was a lot of pent-up demand that did come in. And microfinance again is one space which everyone is saying that that's something which is being used a lot with regards to rural India as well. So if you have to talk about the 3 segments of business that you operate in, where are you seeing traction and what's the kind of growth outlook that you have for the 3?
Right. So definitely there is a lot of demand for credit in the rural segment. So both microfinance and MSME are in the rural segment. Both are targeting kind of the same tranche of society. Maybe MSME is a couple of steps above the bottom of the pyramid, while microfinance is the bottom of the pyramid, so to speak. So there is a lot of demand on that side. There is no doubt about that. Two-wheeler is yet to pick up. We are seeing recovery in sales during the month of June. But schools are off, colleges are off. A lot of that demand will not come back until everything really opens up. Our primary goal right now remains asset quality and repayment rates. So there was a lot of confusion about COVID during the past month. And it was rather important for us to concentrate on the repayment rates. However, it seems the disbursements are picking up faster in microfinance versus MSME.
Okay.
And this is largely for, about 2 reasons. First is that we have a large pool of repeat customers in the microfinance division, which have a very clean repayment history and, clean track record with us. So it's much more comfortable to make an underwriting decision on those customers versus a completely fresh customer. And this is a scenario where the credit bureau data is also not completely reliable. So, a lot of the companies are doing various sorts of restructures or other kinds of mechanisms where the customers who are actually overdue are not even showing as overdues. So, when you have a pool of old customers that are completing their previous cycles, and it's a lot easier to lend them, further cycles. And the second reason is that in the MSME side, we have made the underwriting segment, and there is no joint liability. It's unsecured. I don't know, my internet is unstable. Okay, that way. So while right now microfinance is slightly recovering faster, we are expecting MSME to pick up a lot more faster pace in the coming quarters. Two-wheeler, I think it will take a couple of more quarters to go back to that.
Okay. So overall, if you have to look at the total AUM size, what percentage of AUMs do you think will be coming from each segment? Do you think there will be a change than what we've seen in the last 2 to 3 years?
Yeah, so currently the mix has increased more in favor of microfinance. So while previous about a year and a half, 2 years ago, it was about 70% in the microfinance segment. Currently, the mix is about 77 in MFI, 15 to 17% in MSME, and the balance is in two-wheeler segment. Now, in the long run, and when I say long run, I mean probably about 3 to 5 years and beyond, we do see the focus shifting more from a group-based loan to individual loans, especially in the rural segment. So even with the new white paper that was released by the RBI, it seems that the focus will really start shifting towards individual loans with more income assessment and credit history rather than relying on the joint liability. So joint liabilities had a good run. I think its overall group sizes are shrinking, the ticket sizes are increasing. So how much relevance it has or will have in the next coming 3 to 5 years remains to be seen. So while I do think JLG has a long way to go, I believe the individual rural enterprise loans, which is the MSME sides, have a slightly higher potential for growth in the longer run, 3 and 5 years or beyond that.
Okay. And with all of this, Arman, so any percentage that you can give us as to how do we see the the AUM mix changing between the three?
So I would like maybe in the next 3 years or so, maybe about 65-35 to 60-40 time frame, and maybe in the 5-year time frame, have it be more than 50% on the individual loan side, on the micro enterprise loans versus the group loans. But the situations are very dynamic. India, of course, is very dynamic, and with all of this stuff going on, it's really hard to predict, Hiral, on what things look like 3 or 5 years down the line.
Okay.
We are committed to both segments. As I said, they are distant cousins to each other. We are rural focused, and we've had a good experience in the last 10 to 12 years servicing these customers. And so as their lifestyle and their life cycle also evolves, we'll be there to service all areas of this customer. So we don't want to just restrict ourselves as micro loans or anything like that. I think as the rural segment adapts, we should be there with product innovations to service people at different life stages.
Right. So overall, do you think any newer segments of business that you would be looking to enter as well in the next 2 to 3 years? Is there a plan on that front?
Yeah. So, I've been talking about, so the rural two-wheeler segment is something that we had started recently. So that's about 10 crore portfolio right now. So not very, very large. But it seems that the urban two-wheeler segment is highly, highly competitive. So
okay.
Sorry, go ahead.
Yeah, go ahead. I thought you just stopped and it was the internet fluctuation.
Excuse me.
Go on.
Excuse me. Two-wheeler segment, I think the urban side has been in the doldrums for a while. I think there has been negative, and overall the market share keeps shrinking while it increases in the rural segment. So this is one area that we are to instead of a dealership based model where we pull the customers our products out to the customers, we try to service these rural customers and try to cross sell in many cases as well. Different two-wheeler roads. Another pilot that we are working on is the rural lab segment. So right now, I think the internet is unstable again. But whatever MSME loans that we are doing, that is up to a 2 lakh ticket size. And really it doesn't make a lot of sense to secure these loans at the 2 lakh level, because the cost of securing them is at least 8 to 10,000 rupees if you're talking about mortgaging somebody's house with all the it's the 2 to 5 lakh kind of range. All of a sudden it will make sense to try getting some security from these customers So there is a big potential in the rural side in that segment where, they are in between these kacha land and I think they call it Gamtal properties. I'm not sure what they call it where you are in Maharashtra, but uh, these are basically handled
Hmm.
by the talatis or the panchayats, etc. So that is one aspect that we are looking into as well.
Okay. And apart from this, Aalok, overall, the company has accelerated repayments as well of high cost borrowings. We have replaced it with a lot of low cost borrowings during FY21, due to which our finance cost has gone down. Uh, is there any further planning on that front in FY22? And what's the kind of cost cutting initiatives that we're looking at?
So it depends really on our ability to raise cheaper debt, which is of course our constant endeavor, along with cost cutting also. It's a continuous process.
Correct.
Last year was an exception because our repayments started in June. Repayments from our customers rather started in June. And we did not start disbursements, and that too very slowly until August. So we had a lot of cash available, and that was a good thing, but it was accumulating a lot of negative carry on our books as well. So thanks to DFIs like SIDBI, NABARD or Mudra, we were able to raise a lot of cheaper funds under the special liquidity programs that were announced by the RBI. And so we were in a position that the growth was not there in terms of disbursements because of the moratoriums, and we had an ability to retire some of this debt. So unless the same conditions are there this year, it's kind of unlikely we'll be retiring any debt, especially since we are expecting to grow on a lot faster level this year. But let's see. I don't think it'll be anything on a meaningful basis.
Right. And overall, with all of this, what's the sense that you pick up on the asset quality front? Because again, the anticipation was that the second half of FY22 is when financial institutions will see asset quality worsening on the back of the moratoriums that have been provided, on the back of, the restructuring that has happened. What's the sense that you're picking up?
Well, it's really too early to tell. So our assumption was that there will be, at least for Arman specifically, I cannot talk about the industry, but our assumption was that there will be sufficient provisions and write-off in place to take care of, the first lockdown, COVID 1.0, at the end of FY21. So what that means is it was our belief that sufficient provisions were in place to take care of any NPAs and further asset quality deteriorations that would come on the pre-COVID portfolio. Now, that assumption, of course, kind of went out of the window with the start of COVID 2.0. So let's see how much of an impact that has. As I mentioned, we are seeing a V-shaped recovery in terms of repayments. So I do not expect it to be even close to what it was during COVID 1.0. So largely speaking, it shouldn't be too bad. And normally I'm pessimistic, but this time I'm being very optimistic. I think with June month repayment rates ending at, as I said, 87-88%, it adds a lot of optimism that will recover rather very quickly. But I unfortunately don't have a percentage to give you right now on what actual loan losses might be.
Correct. And overall, Aalok, if you could just help me understand in terms of geographical expansion as well, what is the outlook looking like over the next 12 months? Any states that we are looking to target, and what number of branches are we looking to open?
So usually speaking, Hiral, we start our expansion plan for the next year in the fourth quarter of the previous year itself. So during Q4, we had expanded to a new state, which was Haryana, which was a continuous expansion through our Western UP operations. And we had also made significant headway in the Rajasthan expansion plans as well. So we had opened up around 27 new branches in FY21 with a plan to open about 15 odd more branches during the first quarter. Now, all these expansion plans were put on hold during Q1 of this year. So let us see how the situation evolves this year. We may have to recalibrate our plans. But right now we are concentrating on Haryana and Rajasthan expansion. So Rajasthan being a state that we entered into, about 2 years ago in FY20, and with the pricing caps removed in the RBI white paper that I mentioned earlier, we also see a lot of potential to open branches in previously underpenetrated areas of the states that we are in as well. So a lot of areas in Gujarat, for example, right, where the density of population is low, where the operating costs are high, or the risk is higher. With the pricing cap being removed, I can, of course, try and pass on those extra costs to the customers, whether it be risk or on a operating cost perspective. And that way we can touch these previously underserved customers as well. So I think there's a lot of growth potential with this new RBI announcement in the next 1 or 2 years. It really is a game changer for many of the NBFC MFIs.
Okay. And overall, what's the strategy with regards to where digital expansion goes? Because right now, majority of the businesses have actually ramped up their digital presence. Right now, for our company as well, what percentage of revenue is coming in from the digital side? Do you think there could be an expansion on that front, or do you think it's it still makes a difference to have a physical presence?
I mean, that's a really good question. I think what happened post demonetization was everybody shifted to a cashless disbursement. Previously it was a cash disbursements, and we shifted to a cashless disbursements. Today, as I said, 85 to 90% of our payments come in the cash mode, because that is the segment of society that we are servicing right now. And we are experimenting with a lot of different tools to shift from a cash to a cashless collections. But compared to cashless disbursements, where you can sort of steer the customers to open bank accounts and take disbursements, because the power balance is still on your side until the disbursement happens. It's really exponentially harder to do cashless collections from the customers. So, one of the main, also the thing is that we have to be careful in cashless collections as well from the microfinance segment, especially. Because one of the main reasons why I feel why pre-COVID microfinance repayment rates were so high was due to this high touch model. So you are going to the customer once or twice a month, meeting with them. You are not a faceless corporation. You are somebody that meets with the customer on a regular basis, and I think that helped a lot with the repayment rates. So some hybrid model we want to form. Now what that's going to look like, I'm not sure. We have already in place an ability to accept cashless payments from the customers. So we have given unique QR codes to all of our customers, and it's printed on their loan cards and all their other communications. And there is an API that connects directly into our LMS system. So a customer can use any UPI based app or any net banking app or anything like that to directly pay their installments. So we are future ready, but it seems that the rural segment has not completely embraced the whole cashless economy yet. But let's see. I think this will be something that will be there to keep a close eye on. A lot of people are experimenting on a lot of methods to collect on a cashless methods.
Right. And overall, if you go to see very lastly, Aalok, in terms of FY22, what's the kind of growth that we are expecting?
So we had very detailed business plans in place during March. Those are not applicable anymore due to COVID. It seems that all we do nowadays is make business plans and have some disruption or another come up and kind of make those plans useless. However, barring a third wave or something else unexpected, we expect to probably cross at least 11 to 1200 crores this year in AUMs. Again, depending on how quickly we can recover. But on that note, also, I feel it's important not to be impatient. So for smaller companies like mine, growth is not very, very challenging. As I said, the demand is there. We are doing unsecured lending. Disbursement is not really the key goal here. It's always going to be the asset quality and the repayments. So the analogy I always give is it's like driving a car through fog, So you can always go faster and reach your destination faster, but you may or may not hit a truck in front of you. And the chances become exponentially higher the faster you go. So during times like this, I think it's important to keep your feet on the ground, think over things carefully, don't make sudden moves. And in the grand scheme of things, we've been around for a good 30 odd years. I want to be around for another 30. So we are okay taking things a little bit easier until things improve and COVID is behind us.
Right. All right, Aalok. Thank you so much for giving us this candid conversation. Always a pleasure to speak to you. I hope you enjoyed the conversation as well. Thank you.
Yes.
Thank you. Stay safe and speak to you soon again.
Thank you so much.
Thank you.
Take care. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.